And let's get started. This will also be available for people to view at a later time on our YouTube and some of our social media platforms. But first, I just want to start and say thank you to everyone that is joining us here tonight. I know you could be doing a lot of things, so thank you for spending your time with Dutch Point. We are excited today to take a deep dive into student refinance and what that means to us and how to navigate that world. Graduating can be scary, and figuring out what to do with all that debt afterwards shouldn't be something that you're dreading, especially that you'll have this information after tonight. We have Suzanne and Samantha from Student Choice, and I'll let you take it away.
All right, thank you very much, Octavia. We appreciate it. So let's just jump right into what we were going to be talking about tonight. We are going to take a look at what is going on the federal student loan side. There's a lot of updates, as you know, from the media and what's going on in Washington, D.C. So we'll touch a little bit on that. We're going to do a breakdown of what types of loans that you have. A lot of times people don't understand the types that they have. So we're going to break that down. We're going to talk a little bit about the terms and requirements of those loans. And then I'd like to give you some examples about how you can save money. We deal a lot on a daily basis with members, helping them through different scenarios. So it'll be live scenarios that we're going to be taking you through just for some ideas on how to save money. And then finally, my favorite part of the seminar will probably be talking about tips for paying off your student loans earlier and the resources that you will have after this webinar. So the federal student loan updates, right? There's a lot to talk about here, and I'm going to try to put it in a nutshell for you. So the Biden-Harris administration came up with a student debt relief plan, and actually they took over from the previous administration, but the first and foremost was the pause on interest and payments on federal student loans. And they kept on kicking the can down the road and extending the expiration date. Well, finally, we actually have a drop dead date. Okay, so we know that interest will start accruing September 1st and payments will resume October 1st. Okay, so it's been a while since people have been making payments. But if you're worried about making your payments thinking that it might not fit into your budget for whatever reason, the federal government does have what's called a 12-month on-ramp period in which borrowers' credit reports won't be negatively impacted if they make missed payments. The interest still accrue during this time, but missed payments will not count towards requirements for income-driven repayment plans or public service loan forgiveness. Now, we'll talk about those plans in a minute so that you understand what those two things are. But I can't stress to you enough, with all that is happening on the federal loan side, things are changing at a rapid pace. So you always want to, well, actually bookmark studentaid.gov to get the latest and greatest on the federal student loan side. So there are a lot of deadlines coming up. You don't want to miss any deadlines. So make sure you visit the studentaid.gov site to get, again, the latest and greatest. Now, another part of the debt relief plan was to hopefully forgive either $10,000 or $20,000 to people that had student loans based on their income and based whether or not they had a Pell Grant. This has been blocked by the Supreme Court. This is very disappointing to a lot of people. And the Biden administration realizes that, and they are trying to work on this Plan B. Now, do I think that they're going to forgive debt in addition to what they've been doing? You know, it's hard to say. You know, personally, I don't think so. It's going to be a really hard hill to climb on that. But again, make sure you visit studentaid.gov for the latest on what Biden is planning on doing. Few other updates to existing programs. So there is the Public Service Loan Forgiveness Program. And basically what this is it's providing forgiveness for those members or students, or I should say graduates, that participate in this program to a nonprofit organization if they're employed by a nonprofit organization. And once they make 120 qualifying monthly payments under the plan, the rest is forgiven. So a lot of times people will say, well, is my employer under this public service loan forgiveness program? You can always start at studentaid.gov and use the PSLF tool. You can look up your employer to see if they're on the list, or you can use their employer search tool to discover the same thing, right? So that's where I would start. Now, the update on this has always been in place, but during COVID, the government sort of relaxed what they considered qualifying monthly payments. And now you can do a one-time look to see if those past payments qualify under their new definitions. Now, in order to do this, there is a deadline on this. I believe it's December 31st of this year. So if you have a public service loan forgiveness program on your student loan, call your servicer and see if there are any past payments that are now qualified, so that, and counting towards that 120 monthly payment period. So that's one of the updates. Now, I'm not a federal student loan expert. I just get this information from studentaid.gov. It's all there. And then you can always contact your servicer for specific scenarios, and I encourage you to do that. Now, the other update, there's several income-driven repayment plans. There's basically 4 of them, okay? And they have updated one of them. So if you're in what's called a revised pay-as-you-earn repayment plan, which is basically what they do when you're put in this plan, is that they take a look at your discretionary income. And then they base the payments off of your income, right? It could be 20 years for loans for undergraduate studies and 25 years for those that went to graduate school. So the update on this is a new plan called the SAVE plan. Okay, so what the SAVE plan is, it's saving on valuable education. This replaces the original revised pay-as-you-earn repayment plan. And the new plan provides the lowest monthly payments of any IDR plan and can significantly lower or even eliminate required monthly payments for some borrowers. So again, call your servicer, see if you're under this plan, see if you can qualify for this new SAVE plan, and go from there. Now, before I continue on this income-driven repayment plan, it's really important to know, I was at a conference recently, and I had a lot of different conversations with people, and they say, I can't pay down my student loans. Everything goes to interest. I don't understand. I've been making payments every month. Well, what you need to know is when you originally got a student loan, your original term was 10 years, okay? A 10-year term. And then what happens when you graduate, some servicers automatically put you in an income-driven repayment plan, or you might have asked to have something put in these plans to make it more economical for your budget. But what they probably didn't explain, or you probably didn't understand, is that now that term is extended out to 20 or 25 years. Depending on your studies, right? So that's why people are having a hard time paying down those federal student loans. It's because I think personally, we as a country don't really explain the financing part of it. People are just looking to the payment to see what's satisfying them, and not looking at the term and all the interest that you're going to pay for that longer term. So just, these are really good plans. I'm not saying that they aren't, especially if you're in financial hardship. I think it's really good. But as soon as you start making more money, and of course the federal government, makes a record of your yearly income, right? But as soon as you start making more money, try to pay as much on that loan as possible so that you can start making principal reduction on that loan, okay? There's other plans, the pay as you earn plan, which is 10% of your discretionary income, generally 10%, never more than a 10-year of a standard repayment plan, but they can go 20 years. So again, just make sure what you're getting into. These are two other plans that the government has. I'm not going to go through it, but under all of these plans, any remaining loan balance is forgiven if your federal student loans aren't fully repaid at the end of the repayment period. So that's the attraction too of it. You know, lower payments, and then I can have the government pay it off at the end of this, right? At the end of the 120 period or whatever the plan is. So again, I would encourage you to go to studentaid.gov to make sure what you're enrolled in, what your term is, what your interest rate is, so that when you start comparing or deciding whether you should refinance your student loan, you know what you're getting into. Now, something very important to understand about federal loans is that if you do refinance those federal loans into a private student loan refinance, all of these benefits go away. Okay, so make sure you understand that you've exhausted all this, you don't want any of these plans before you refinance into a private student loan program. Okay, so, and what that is any institution other than the Department of Education. So there are fintech centers, you know, credit unions, banks that do private student loan refinance. And then there's the federal side. So we're going to talk a little bit about what the federal government can do for you in terms of a consolidation too. So stay tuned for that. So again, these are additional loan benefits through the federal government. Like I said, public service loan forgiveness is out there. There's a teacher loan forgiveness program. There's again, that one-time student loan debt relief program that was promising to pay off your debt up to $20,000. That's been blocked by the courts. I don't see that coming back. I really don't. I would be surprised if it ever went through. So again, that's just a real quick overview. Now, another update that we have to be aware of on the federal loan side of things is that there was a huge shift in loan servicers. So a loan servicer is a company that just processes your student loan payments, you know, issues a statement every month and serves as your primary contact for any questions related to your student loan. So the most popular ones were Navient, Granite State, Cornerstone, Fed loans. So a couple of years back during COVID, a lot of these servicers' contracts were expiring and a lot didn't renew their contracts. So all of these notes, these promissory notes, these loans transferred over to new servicers' name, okay, like Mohila, Nelnet, etc. So if you are in that bucket, you really need to prepare yourself for what's coming down the pike. So think about it. If your servicer has changed, plus payments haven't been made on loans for 3 years, and the government is finally accepting payment October 1st, there's going to be a lot of questions and a lot of bogged down lines. If you want to call for help, you might not get the help that you need right away. So make sure right now is the time to do it, to get prepared. So find out which company is servicing your student loan. Again, you can go to studentaid.gov to understand that. Understand your student loan type. Do I have federal? Do I have private? Do I have any plans under the federal loans? Okay. And again, this servicing change only affects federal student loans. Always continue to make your payments to your current servicer until you receive official notice from the Department of Education. They'll notify you in writing. Okay. Once you get that new servicer information, make sure you update your automatic payment information. A lot of us have automatic pay. We haven't been paying these loans for 3 years. Make sure your bank is, bank information, your credit union information is up to date with the servicer or with the new servicer, right? And make sure you update any information that affects your income-driven repayment plan. So Any income-driven repayment plan is going to require yearly paperwork from your employer to the federal government. So you want to make sure that all of that information is up to date and you are ready to rock and roll on October 1st. So just a few tips in that regard. So now we're going to go to understanding your own student loans. Where do you begin? This is really confusing. I get it. I have two daughters that have graduated from college, and I have a nephew that I'm helping getting into college. And not only is the paperwork confusing, and I'm in the industry, but going into using the electronic tools and when do you use it can be very confusing. But however, if you go to your studentaid.gov site and you go into your account, if you don't have an account, you can certainly set one up with them. Anything in there in terms of a loan is federal loans. Your private student loans will never be in studentaid.gov. Okay, never. Okay, that's a separate entity. All your federal loans will be your federal grants, federal scholarships. You'll be able to see all of that in your federal student aid dashboard. And what is interesting in this dashboard is that they have public service loan forgiveness help tools, right? They have a what if calculator, loan simulator. So all of these programs, you put in your ID and they can simulate what you have and what's better for you, so that you're not going in there blind. So I would encourage you to do a loan simulator on yourself and then call your servicer and see, hey, I did this loan service simulator. I have some questions. I'm thinking that this plan is better for me. Is it? Have those conversations. Okay. Now, when you have those conversations, it's important to understand the difference between federal or private student loans. So again, federal student loans, you'll always find them at studentaid.gov. Okay, you can log in and create your own FSA ID if you don't already have one. If you've created a FAFSA form in recent years, you have one. It's out there. But if you haven't, you can create one. You can look at the dashboard. You can also go to the National Student Loan Data System, the nslds.ed.gov. Again, that's only for federal student loans. It'll give you a list of that. Now, once you get those loans and you understand which is federal and which is private, get the information, okay, needed to make good comparisons. Get your current balance. Get how much of a term is left on that balance. What is the interest rate? Is it subsidized or unsubsidized? So what that basically means is that when you first got a loan, when you were going to college, there were two types of direct loans, subsidized and unsubsidized. Subsidized meaning that the government pays the interest while the student is in school. So that's important to understand for a reason. And unsubsidized means that the student is responsible to pay that interest back, okay? Now, the reason why you need to understand the difference between the two, especially for those students that have graduated college with their bachelor's, and they might be going for their master's, they might be going back to school for their graduate degree. Well, if they go back, that subsidized loan is reactivated, right? So interest stops accruing, and that's why you need to understand if you have subsidized or unsubsidized. So also get the monthly payment and always get the servicer contact information. That's what you're going to need. Now, the benefits of getting a federal loan is that you can have additional deferments after graduation. Okay, you could have loan cancellation for death and disability. Again, this is for the federal side. There's forgiveness programs for teaching and public service that we talked about earlier. Those repayment-based options, including income-based, are there for you, especially in financial hardship cases. And they do offer consolidation options, and they help with default rehabilitation. So once you have all that information, what is your goal? Okay, are you there to lower your interest rate, lower your payment? Maybe you're going back to school, you want to put things in deferment. What is it that you're looking to do? You need to understand what you want to do before you talk to the servicer so that you can direct them, and you can control that conversation. So One of the tools that the federal side has is the consolidation solution. So if you have federal student loans, you can ask to consolidate them through the Department of Education, which is the federal government, right? And there are no origination, processing, or disbursement fees. Okay. The terms can be up to 30 years. So that can make your payments really flexible and attractive. There is a fixed rate, and there's a fixed rate on all federal loans, just so that you're aware of that. But the federal consolidation solution, it does a weighted average of loans consolidated. So that's why I'm asking you to find out what your interest rates are. If they're always, if they're hovering about the same, then this might be a good product for you. But if you have a sprinkling of low interest rates and high interest rates, and you combine them together, depending on the loan amount, it might not be a good deal for you. Okay. So again, there are resources to help you through those conversations. We'll go over them at the end of the webinar so that you're not feeling like you're walking on a tightrope. But I just want you to understand what the consolidation solution offers you. You can only refinance federal student loans in the federal consolidation solution. You cannot bring in private student loans. Okay, so that's also very important, and it's different, right? There's no cosigner. They do offer 0.25% rate discount with automatic payments. And there's no credit or income verified on this. It's a very easy, well, I shouldn't say easy, it's just a paper process, so to speak, right? So that is what the consolidation solution offers you. So once you have federal student loans, you have a good understanding about federal student loans. What if you have private student loans? Okay, what are they? Okay, so private student loans are generally loans in the student's name first, and usually they have a cosigner, because when you're typically 18 years old, you don't have credit, you don't have income or significant income, so you can't handle a student loan debt or any type of loan on your own. Right. And usually these private student loans are higher in dollar amount than the federal student loans are. Federal student loans, incoming freshmen now, the most they can get is $5,500, whereas a private student loan, they can get a much higher dollar amount, up to $75,000, $100,000, depending on, undergraduate or graduate schooling. So you can see there's a big difference in that, because it's significantly higher, institutions will have underwriting criteria attached to it. So qualifiers, okay? So you got to understand if you have a cosigner or not. You got to get the same kind of information that we asked you to get on the federal side. What is the balance? What are the repayment terms? What's the interest rate, monthly payment, and servicer? Now, the benefits on the private student loan side varies by lender, because now these loans are not governed by the Department of Education. These loans are governed by, like I said before, credit unions, banks, fintech companies. They're all different. So they set their own rates, their own fees, their own underwriting criteria. However, they do have an option. Most financial institutions have a cosigner release option embedded into the note. So after, an example would be after 48 months of consecutive on-time payments, you can be, the cosigner could be released. Now, it's sort of like reapplying. It's not something that you just tick off and you're released. That it's sort of like they take a look at the criteria again and make sure that the person that's first on the loan can handle the debt before that cosigner is released. There's usually interest rate reduction for automatic payments on these, anywhere from 0.25% to 0.5%. They do give forbearance options. So in times of financial crisis, you can call your servicer, talk to them, and they can give you a payment forbearance, which means basically not making any payments for 3 months, 6 months, 12 months, whatever your situation is. They also offer what's called a graduated repayment option. Not everyone, again, does this, but most of them do. And it's only offered one time after graduation for people that are in financial hardship. And it takes that original term, and terms on private student loans range anywhere from 20 to 25 years. So it'll take that term, it'll extend it out to a longer period, which is usually 40 years, to make the payments much smaller and affordable. And then after 2 years' time, it reverts back to the original amortization schedule. Okay, I don't recommend that for anyone that's not in financial hardship. I think that this is only used to protect your credit. It should not be used to just give a breather for a couple of months. No, 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 no. Well, we don't want that because that's not good because you pay extra interest in the long run. So be careful if you use this. There are other refinance options. Again, it depends on the lender. And some lenders also have unemployment protection, not all. It's very, I wouldn't say it's rare, but it's very few and far between that they offer unemployment protection. Maybe you'll see more of it in the coming months, hopefully. But just know, you know, these are one of the questions that you can ask, right? That might be important to you. So what does a private student loan refinance look like? Usually there's no origination fees, processing fees, or disbursement fees. So if there is, move on to the next financial institution. There are plenty out there that don't offer the fees, okay? Terms can be anywhere from 5, 10, 15 years. Your rate could be either a fixed rate or a variable rate. Now, a variable rate, I would be, you know, just ask a little bit more detailed questions if it is a variable rate, because it can change. So how often can it change? What is it tied to? Is it tied to the prime rate? We hear on the news, the Fed has raised rates again. That's going to affect these student loans. So need to understand the difference between the two. And then you can, in a private student loan refinance, you can consolidate federal loans, private loans, plus loans, which is the parent loan for undergraduate students, and institutional loans, student loans. So some colleges and universities have their own student loan program. As long as it was for the benefit of the student, we will refinance that in. Now, a lot of times people ask me, well, how often can I refinance, especially in this interest rate environment where rates are climbing, climbing, climbing. And I always say, hey, you know, if you're saving money, you know, refinance now, right? And you can always refinance later if rates drop in the next 1 or 2 years, right? There is no limit on how many times you can refinance or consolidate, okay? A co-signer might be needed for a student loan refinance. It depends on your situation again. If you have a job, if you have income coming in, if you have credit, all of this factors into the loan decision. There's usually a 0.25% rate discount with automatic payments, and there's always going to be underwriting criteria. Every institution has them. They're different for different institutions, obviously, and you might want to have a discussion with your lender about what those criteria and that determination is. Now, Dutch Point has a wonderful program, a student loan refinance solution. They don't offer any origination fees or processing or disbursement fees. They offer terms of 5, 10, and 15 years. They do variable rates and they do fixed rates. So you're probably saying, why would anyone want to do a variable rate now? You know, well, sometimes you're better off doing a variable rate at a shorter term, depending on your financial life cycle, right? If I'm just graduated from college, I'm starting a new career, not sure if the money's going to come in like I want it to, then I probably would stay away from variable rates because, you know, the payments can change with the interest rate. But if I'm 45 and I have a few student loans left and maybe the variable rate's lower than the fixed rate, then I might want to do the variable rate, you know, at a 5-year term because it's lower than the fixed rate. So again, we have resources for you to talk through the different scenarios to see what is best for you. And again, you can refinance with Dutch Point all your private, federal, institutional loans and plus loans that you have. Their loans go from anywhere from $5,000 minimum to $50,000 maximum. They do offer 0.25% rate discount, And they do offer a co-borrower release option after 48 months of consecutive on-time payments by the first person on the application. So if it was taken out for your student, the student has to show that they've been making payments on time for 48 months. And then Dutch Point will consider that. It's totally up to them and their discretion on who they release from that loan. Now, I think it's really important that once you have all that information, that you go out and do some calculating. Okay, there's so many good calculators out there. And one of them, your credit union offers through their co-branded website. So I'll show you where to go to get this exact calculator. But there are others out there that are just as good. But I like this one because, as you can see with this information, this scenario, the current balance of me, comparing and contracting is $61,000, right? So I am looking at a $61,000 total loan balance. My current interest rate is 9.5. I have 180 months payment, remaining. And then what happens is I personalize the term of my new loan offer. Okay. Do I want fixed? Do I want variable? Do I go 5, 10, 15 years? And if I do, what happens to the payment and how much do I save? In this scenario, 10 years versus 15 years. Okay, 10 years, your new payment is $707 as opposed to 15 years at $547. But look at the difference in savings on interest, $28,000 versus $9,000. That's huge. So again, what is your goal? Is it to reduce your term, increase your payments so that you don't have to pay a lot of interest over time? Or is it reducing your monthly payment? You might have to pay a little bit more interest in the long term, but at least you can get through it with your specific budget and not, so to speak, break your account balances, right? Now, we are very fortunate when we work with Dutch Point. We also work with credit unions across the country, and we work directly with their members. And we get a lot of good one-on-one consults. And this is actually, I just wanted to share this with you. This is one consult with with a person. This is a real story. This person came to us with 3 federal direct unsubsidized loans totaling $27,000, 2 federal Parent Plus loans, interest rate ranges. You can see that 10-year term with 8 years remaining. But their objectives were 2 things: lower interest rates and terms, and take over responsibility of those federal plus loans from the parents and transition it over to the student, or now the graduate. Okay, so that's what this member wanted to do. So their monthly payment was $1,300, a little over $1,300, and he was paying a total interest of $30,000, almost $31,000. So what he did was he refinanced for 5 years at a variable interest rate. See, they went with a variable rate at 3.45. The monthly payments increased, but look at the total interest, right? He saved a lot of money, number one. Yes, his monthly payments increased, but he got rid of those loans that his parents took out on his behalf. So real quick, those plus loans are made in the parent's name only. You can't add students to it at the time that you take it out. So once someone graduates and start making money, a lot of times they want to take that burden back onto their shoulders and take it off their parents because, their parents are getting ready for retirement. So that was one comparison. Another scenario was this person came in with 6 federal direct subsidized and unsubsidized loans. These are the interest rates you can see on the screen. 10-year terms, 9 years remaining. They had 3 private student loans, okay? And the borrower was enrolling in a graduate school for the next academic year. We told them not to finance anything, okay? Because both the federal and the private student loans may be deferred while they're in graduate school, right? Those federal subsidized loans may not accrue interest while in deferment. So that's why I told you, you have to understand if you have a federal loan, is it subsidized or unsubsidized? And private student loans have low interest rates usually and manageable monthly payments. So his option was to refinance after graduate school. And that just made sense in this scenario. Now, tips to consider for paying off student loans earlier. Some of them are evident, but it's worth mentioning or just having it brought to your attention, because I think that we forget sometimes. All right. So, you always want to make sure when you're thinking about paying it off earlier, track your debt. That's going to help. Like, track it like you would your car loan, your mortgage, any other loan that you have. Student loans are forgotten about a lot of times because in the beginning they're deferred, right? So we don't think about it as much. Make sure you calculate your debt, hold yourself accountable, and celebrate those milestones. I paid off my youngest daughter's student loan a few months ago, and I was so happy. I did a little dance when I paid it off. But make sure you take the time to do that because it makes you feel better, right? Make sure you make more than the monthly payment. There's no prepayment penalty on any federal or private student loan debt, so you can make lump sum payments at any time. Let's say if you're in deferment and you come across some money, someone gives you $1,000, put it on that student loan. The goal is to pay this off early and get it off your back. Make sure you find the payoff date. That's just good comparison tool. That's part of finding out how many months left you have. What is the term remaining? Take a job that offers forgiveness. There are many employers there. It's hard. The job market's really hard to find really good talent. And HR departments are getting very creative on what they offer people. And part of that is, student loan forgiveness. Now, they might not forgive all of it, but maybe after a year's worth of employment or 2 years, they might take off $5,000, or they might payment match. I've heard of that becoming a little bit more popular, especially given what's been going on in the economy. If you get raises, put it right towards your student loan. The goal again here is to pay it down as soon as possible. So you don't miss something that you don't use yet. So just put it on your student loan. Obviously trim your budget, especially with October 1st around the corner. Now is the time to take a look at your budget and see the effect that monthly payment is going to have on your expenses. Add a good cosigner if you're refinancing a student loan, because what happens is usually the financial institution will go with the applicant that has the higher credit. So the higher credit, the lower the interest rate, because it's called, what we call in the industry, risk-based pricing. So if you have an applicant, especially married couples, if one spouse has a better credit than the other, put that one on first. Earn extra money with an additional job, side hustles, but be very careful of scams. We are starting to see an uptick in scams, especially with what's going on, the buzz in the media about student loan debt, people promising to, pay down your student loans or give you debt relief. Make sure you vet them very carefully, okay? I always would like to deal with the servicer directly on these things and not a company, right? And take your interest rate reductions, 0.25% rate reduction, 50%, half a point off of your rates for automatic payments. And then get into a certain psychology of making payments, what I call the avalanche, snowball, and snowflake, right? So the avalanche effect is to pay down the largest debt first, right? Once you pay that debt off, that makes you feel good, right? Not everyone can do that. I know that I couldn't do that. I had to take what's called the snowflake approach. So the snowflake approach is taking your monthly payment and dividing it by either 4 or by 2, and paying weekly or biweekly payments. to bring that principal balance down every week or every 2 weeks. The reason why I say that is that student loans, the way they calculate interest is daily interest, what we call daily interest, simple interest. And every day that that loan is outstanding, interest accumulates on that principal balance. So the more often you reduce your principal balance, the less your interest accumulated interest amount will be. So if you're going to pay a monthly payment anyway, and if you're going to set it up on automatic payments, and you don't care, you're not doing anything because it's automatic payments, why not do that? So that's the snowflake approach. Then the snowball approach is taking those smaller loans, paying those off, taking those payments, applying it to the next highest loan amount, and going up and up from there, right? So that's the snowball effect. So just a few different psychological ways of approaching debt. Make sure you budget and balance your checkbook every month. Now, that seems evident. A lot of people might not balance their checkbook. Sometimes I fall into that bucket. I don't check I don't balance my checkbook every month. But if I had student loan debt, I'd be very careful, especially with a debit card, right? So again, these are serious ways to cut down on your student loan. I realize that, but maybe you put your debit card away for 2 weeks out of the month. And every time you go to use it, I know that when I go out to eat and I have a bill of $75, it's a lot easier to put my debit card on the table or my credit card on the table than cash, right? If I put cash down on the table, it hurts. So maybe you're more aware, and maybe instead of putting that cash down on the table, you put it towards your student loan debt. You don't go out as much, and you go and pay that debt down. Talk it through with a financial counselor, your credit unions, other institutions, your CPA firm. Talk it out with your financial counselor and see what is best, how to best tackle student loan debt. Some people have a lot of different ways that they can go, whether there's equity in their house, is that the best option to pay down this debt or pay it off? I don't know. It might be for you. Some people suggest or ask me about retirement funds, whether they should do that. Again, I'm not a financial counselor, but all I can remember someone telling me is that I have a lot less spending potential than my daughters do. So be careful when you're doing that. So talk to a financial counselor. And then again, matching benefits by employer, by state. These are the things that would be helpful to you. Now, I mentioned that we do have resources for you, especially through your credit union. So we have, your credit union has a co-branded website. And I believe, and Sammy, who's on the line, I believe it's dutchpoint.studentchoice.org. I'm not sure. She'll correct me in a minute if I'm wrong. But if you go to that website, you can make an appointment with our college access counselor. Now, this is for not just undergraduates, but people that have graduated. She's not a salesperson. It's free to you. You can give her different scenarios, any questions that you have on the federal debt side or the private student loan side. We can help with that. We can have those conversations. We can do a loan calculator event for you to make sure that it makes sense for your budget. So please take advantage of that. And that's it for tonight. Hopefully I encourage you to ask some questions at the end of the session. I'd be more than happy to take any questions that you have. And I'm not sure if we had any in the chat, but I'm around for a few minutes.
So thank you so much, Suzanne. I really appreciate your time. Very informative. I feel every time that I meet with you, I learn something new. So thank you.
You're welcome.
I did want to clarify the website is dutchpoint.studentchoice.org. So you can go there. And I also want to urge everyone right now, we have a special going on and you can get up to $250 cash when you refinance your loan. So I think that's something definite that's worth looking into and definitely worth going to the site to check out. So that's dutchpoint.studentchoice.org. And we do, yes, we have time. We have a couple questions here. I can read off the first one. So the first question is, Um, Once I refinance my loans with Dutch Point, will I be able to defer them?
Again, that is up to your Dutch Point servicer. They do have ways to defer payment under hardship forbearance or there's different types of forbearances out there. It's not just hardship. There could be a military forbearance out there. So I would talk to the servicer. The servicer is found on your statements. By regulation, it has to be displayed on the student loan statement. And we can definitely talk through your individual situation.
And also on that dutchpoint.studentchoice.org website, there's a support tab and it has, you can contact a counselor for general questions and also a representative as well. Another question that we have is how long is the application process? I think I can kind of answer that one. The application process, it's not long at all. They really try their best to get you wrapped up as soon as possible. That means that you need to come prepared, have additional documents, and everything that's required once you start, or speak to a representative and they'll let you know what you need. But I've found that it kind of goes hand in hand. They try to get you through the process, but then they're missing something from the student or the graduate, and it kind of delays it. But from a student choice perspective, they're pretty on point. This is a good one. Am I able to consolidate several loans from several different schools into one loan with Dutch Point?
Yeah, that is a good question. Thank you for asking that. It depends. The answer is it depends where you ended up graduating from. So we do student loan undergrad and student loan refinance, but only for those approved schools. That approved school list is out on the co-branded website. And again, if you can't find that, we'd be happy to see if your school is approved. Now, if it's approved, we'll be able to wrap all of those loans into one for sure, as long as you qualify for the loan.
Yes. And I think you answered this next question. Can I pay more towards my loan to pay it down faster without penalty? And you are able to pay that down. Um,
Absolutely.
the other question is, if my credit score improves after I've made several on-time payments with my loan with Student Choice through Dutch Point, am I able to refi or refi?
Yes, you can. You can refi as many times as you want.
That's good. And the other question, which you already answered, the last one that I have over here is, how do I know if my school qualifies for a refinance? And again, that's through that dutchpoint.studentchoice.org
Yeah,
website.
I believe it's under the frequently asked questions section. So it's one of those options. I think there's several like questions under that. And I think it's towards the bottom, I think, if I remember right. But it is out there. But if you need assistance in finding out, we can certainly get that information to you.
And I think that's it. I don't have any other questions. Thank you so much for your time. Thank
Oh,
you
you're
to all
welcome.
the members that came out tonight. Um,
Yeah, my pleasure. Good luck to everyone. I know that it can be daunting at times, but just know, you can always walk into your credit union, or call your servicer. We'll be more than happy to talk to you. Our college access counselors available to you. Go to your studentaid.gov site, sign up for notifications. There's a notification button out there so that if anything changes, and we know a lot has changed on the federal side and continues to change at a very fast pace, you'll get a notification of that. So those are the areas that you would, I think that if you know your resources and know that, there are options out there, it doesn't have to be, so scary. And I get it. My youngest daughter, she had undergraduate loans. I paid it off, but she also has graduate loans under her name, which I'm not on. And I don't know how she sleeps at night. Like, oh my gosh. So I get it. I'm scared for her. So, but just know that I think that with a lot of sacrifice. If this, you know, you have to make it your mission to pay this down, because this inhibits you, right? You know, I'm not going to lie, I'm in the business and I get, you know, it will affect your ability to get a house sometimes, or a car, or that vacation. So you want to pay this off as soon as you can. And there are many ways to do it. It just takes you know, your mission in life is to pay this down. That's what it takes.
Right.
So good luck, everyone.
Thank you.
You're
Bye,
welcome.
and everyone have a good night.
Thank you. Take care.
Bye.